Hello again, everyone. Welcome back. In this technical analysis of the stock market video, we're going to walk through the index ETFs, take a look at the sector section here, drill in on a couple of these, and then I want to show you how the 10-year yield and the dollar index performed this week. So let's start off. I titled the video Dazed and Confused because that's really the sentiment that you kind of get. It's what the sentiment we're getting out of Wall Street for sure. When you go from zero sectors positive last week or the week before last and everything negative to all of a sudden this week, 13 sectors positive and 3 negative. Okay. So everybody's sitting back going, whoa, wait a minute, what's going on? You had the big move on Wednesday and not very many stocks and hardly any of the sectors have closed above Wednesday's high at this point. Now, it's only been 2 days, and it was a huge range, but that's where we sit. But then not just Wall Street, but the consumer, the American consumer, is actually dazed and confused. This consumer sentiment came out, the University of Michigan sentiment that came out, survey came out on Friday. And you could see what's happening in here. The expectations index is the worst since May of 1980. And the inflation expectations are the highest since 1991. And you can see that little chart right here. It's not a pretty picture right now. Okay, so you've got that really, really negative consumer sentiment that's going on. And then you've got the gyrations and the tariffs and everything. And we'll talk about that 10-year yield in a few minutes. Let's start off here with the index ETFs. So the strongest mover to the upside with the Qs got a heck of a bounce this week, up 7.5%. Everything was positive. And the weakest, of course, has been the Russell 2000. It was the weakest this last week, and it is the most negative on the year. Everything is still in the red, but the Russell 2000 down 16.5%. Pretty negative picture. Now, for last week with the big bounce, semiconductors really came back, up 11.3%, but they're still the most negative on the year, right there with retail. Well, and there's that consumer, right? Okay, and then when you look at home construction, it was the most negative. Of course, there was only 3, but it was the most negative, down 3.6%, mainly because the long-term interest rates are going up and it's affecting the mortgage rates, right? So the only 2 that were positive, consumer staples, XLP, and utilities, XLU. They're the only 2 that were positive, and these were the only 2 that that closed above their Wednesday high, their Wednesday range. Okay, so let's start off and take a look at the Dow Diamonds. So here's the picture with the diamonds. Up 623 on Friday. You can see again inside that very big range that occurred on Wednesday. Up 1869 on the week. Now, I'll say that the positive picture that we're seeing here on the weekly view is I like the way, we had the gap, big gap lower, and then it comes back and it closes above the midpoint in here. Now, that's no guarantee, but it's a positive sign that we're back above the midpoint of that body of the prior week. Now, it looks like we may have gotten support in here too at the 380, the 376 to 380 level. It definitely broke below it during the week, but if you look over here on a close-only basis, just the daily closes, the close that occurred on, the 8th, Tuesday, was right in that zone. It closed at 376.48. And again, that zone is 376 to 380. So we'll see what happens. We'll see what kind of follow through we get. Let's take a look at the SPY. And here's what happened with the SPY on Friday. Up 936, same kind of picture. Weekly up 28.66, big move, but it's the same picture that I just talked about. Let's take a look at the Elliott wave picture here. Okay, so the longer term, let me zoom back in a little bit here. So right now, I'm still looking at this as a fourth intermediate wave. We just can't have it close below the high of intermediate wave 1. So the way I'm counting this is a WXY. And how long it's going to take for that X to flesh out, what kind of form is it going to take, who knows. I'm expecting a 3-wave move. I'm expecting a zigzag, but it really could be just about anything. And we'll see how long it takes. So that's where we sit on a weekly view. You can see how oversold we got. It's the most oversold that occurred since back, I think, since 2020. And let's take a look at the daily view in here. So this is what I'm looking at. So here's where I've got the low marked with Tuesday's price action. Now, you look at that and say, well, why do you have Tuesday's price action? It's not the low of the week or the low of the move. On an intraday basis, no, it's not. On a closing basis, it is. And when you look over here on a 130-minute time frame, and if we go to close only, then all of a sudden, between the end of the 4th wave to the 5th wave, we have a beautiful 5-wave structure in here. And I think that we've got the 5th wave and that we're done with this move. Now, the only thing when I look at this in question is, did wave 1 really end here or did it end up into here? And in the grand scheme of things, I don't think it matters a whole heck of a lot because of where we are, where we sit right now. I am looking for this low in here to hold, for this to continue pushing to the upside. So that's, well, again, we'll see what we get and how long does it take. I'm expecting a rally into at least the early May. You know, maybe it'll go stretch to mid-May. We'll see. And again, you know, if you talk about where we're going to get resistance, you got gaps to close in here. You got a prior high up in here. What is the high? 576.41. Yeah, 576.41 is the high right in here. Okay, so that's where we sit with the SPY. Let's take a look at the Qs. You know what's amazing about this is how similar the price structure and the price action has been in here. Now, the degree, the movement is a little bit bigger on the Qs, but the picture looks very much the same. Up 822 on Friday, both of these candles inside the huge range that occurred on Wednesday. And again, on a weekly basis, up 31.73 and closing above the mid point of the prior body. Okay, so potentially bullish, we'll see. And then, of course, you get, let me go back, you get this kind of news that came out with a post that was put out. I think we'll get down, but President Trump's exempting smartphones from the reciprocal tariffs after the market rout. But when you drill down and take a look, see, it was a notice posted late on Friday night by Customs and Border Patrol. Smartphones, along with routers, chip-making equipment, wireless earphones, and certain computers and laptops will be exempt from reciprocal tariffs, which include the 125% levies imposed on the Chinese imports. So pretty interesting dynamic that's happening in here. And I wouldn't be surprised at all to see a continued bounce and push to the upside on Monday. We'll see. You never know what's going to happen between now and then, honestly. You know, and China's going to open up, Sunday night and trade overnight. So we'll see what happens here with the Qs. So again, the expectation on the Qs, I'm not going to go into the LA wave this weekend on the Qs. I've got that scheduled for next weekend. But right now, my expectation is very similar to what I just talked about with the SPY. Let's take a look at IWM. Okay, so up 265 on Friday, same thing, only a lot weaker on the weekly picture. Look, up only 317 on the week, and look where it closed. It could have closed all the way up in here, but no, just didn't have the strength to do that. So it's just not a very, very pretty picture. Now, I'm not going to, I was really tempted to go into the LA wave right now, but I'm not going to do that just yet. Okay. All right. So that's the indices. And so I talked about those sectors. Let me scroll down. Let's take a look at the biggest mover to the upside, semiconductors. It was up 11.3% on the week. Now here's the picture. We came right back and closed almost exactly, a little bit higher, but almost exactly on the low in here that occurred back in August. So we smashed through that the prior week, and then we come back and we close right there. So we'll see, where do we go now? Do we get some continuation to the upside? And then when you take a look at the two ETFs that closed the most, that are positive on the year, XLP and XLU, here's their price action. So you can see, here's Wednesday's range, right? Here's the high, closed above that high. Okay, and if you drill in and take a look at consumer staples, there's at least a handful, if not more, that all did a similar type thing in here. Okay, closing above Wednesday's range. And here's the big positive move, almost a bullish engulfing type candle on the week, up $1.89. All right, and then here's XLU. It was the other one that was positive. It had broken down out of this range that it had been in, and then we're right back up to the bottom of the range now. Look, I mean, in essence, it achieved its targeted move. When you think about breaking down out of a range like this, you moved exactly the distance of the range and then some, and now we've come back. So we'll see, is that it? Is that all we're going to get? And then we're going to, take off to the upside. Okay, so that's XLU. Now, the other major dynamic that was going on this week that supposedly really spooked the Treasury Secretary in the White House, etc., was the bond market. Well, I'll tell you, when you look at this, let's take a look at the 10-year yield. This move from the low on the prior Friday at 3.88% to, okay, so here's Tuesday morning. Here's Tuesday. No, here's the end of Tuesday. Now you see what was going on overnight, Tuesday night into early Wednesday morning, and they were getting spooked, and they then changed their position, and we got the explosion. I mean, they were getting spooked by this move and other things that were happening in the bond market. But we came back down on Thursday, but look where we sit on Friday. It's actually worse. Now, some people will look at that and they talked about what was really going on. They think, well, it was the speed of the move and other little things that were happening. But this picture, as we closed on Friday and how high we got, up here at 4.59%, not a pretty picture. We're up 51 basis points on the week. 51 basis points, big move. So with this kind of move that's going on, well, wrong one. I want to pick on the dollar index. Here's what's going on with the dollar index. Down 77 cents on Friday, down $2.92 on the week. Now this is pretty interesting in that we've got a potential support zone in here. I don't know that it's going to hold. I mean, we're talking about the lows from September of 24 and the lows of July of 23. Okay, we came down into it, went below it, and then came back. You can see how the bulls tried to take control on Friday afternoon. Well, when I look at this from an Elliott wave perspective to the downside, it makes me think that maybe we got a little more chopping around to do and then maybe one more thrust lower. We'll see. The bulls are trying to take control. We'll see if they're able to do that. You know, we've had, like I just showed you, one heck of a move in not only the 10-year yield, but we got the, the mortgage rates are back up there. Let me see if I haven't looked at the 30-year actually. Well, you got a similar kind of thing. That's weekly. Let's go to daily here. You know, so it's, yeah, 4.88% on the 30-year Treasury yield. And we were up 49 basis points for the week. So a very similar kind of move. So not a, a little bit unnerving for this kind of move in the bond market in the long-term treasuries. So that's where we sit. Okay, that's it for this weekend. If you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to the channel, hit that little subscriber button. And if you'd like more of this information on a regular basis, head on over to joehenches.net. All right, everyone, have a great week. Never a dull moment.